Hey there, Claire here from My Mortgage, and today I want to talk about something super exciting: break fees and non-utilization recovery costs. So this is something that is bank speak for basically when you have committed to a certain rate and then you have to break that rate for some reason or other. So it must be generally a change in situation. So firstly, what is a break fee? Basically, it is a fee that the bank is allowed to charge if you decide that you need to break a rate that you've agreed to early. A non-utilization recovery fee is when you've decided to take a rate out into the future, so it might be a settlement date or it might be a refix date, and then for some reason or other something changes, a settlement date changes or the rate changes or you want a better rate. So that non-utilization recovery cost is the same virtually as a break fee, it's just structured slightly differently in a different situation. So one thing we want to be really aware of at the moment in the environment that we're in with interest rates starting to perhaps plateau and start to drop off is that break fees start to become really important to consider. So a break fee usually occurs, now not every time, but usually occurs when the rate that you're paying becomes higher than the market rate. So if you've fixed, let's say at 6.99 today, and then the rate is 6.5%, so it's gone down, and you need to break this rate up here, usually the difference between the two is what the bank will charge you. Now that could be any cost, that's the cost to them, so it's not usually the cost to you over that period of time. So they basically just dictate what that fee is going to be. They let us know what it is, and then we discuss whether or not that's going to be the right option. So when we're thinking about break fees at the moment, really important to consider how a longer term fix, let's say a 2 or a 3 year fix, might actually affect break fees in future. If you want to make some changes to your loan, let's say you have a pay rise and you want to increase your repayments, or you want to change up your loan structure because you've got some extra money that you want to offset, or even if you want to sell your property or another bank is providing a better option, break fees could become a part of the consideration. So when you're looking at fixing at the moment, think about how that might play out over time. Think about whether you might have a change in situation, if there could be something coming up in the next couple of years, if you're thinking of selling, even if it's a maybe. Talk to us about how that might affect you, because break fees can be expensive. I know this from personal experience. When I sold my first home, we fixed for 5 years under good advice, and then we actually needed to sell within 2. We had a $7,500 break fee. So really, really important to consider what things might happen in that next period of time and how you're going to mitigate that. So talk to us about that. We can set something up for your situation and make sure that this doesn't become a thing for you.